All righty, what's going on, everybody? Happy Tuesday evening. How's everybody doing? Sorry for running a little late, but my son's middle school basketball, I guess, semifinals, started late, so it ended late, and then dinner went late. So, but I'm here. I'm on. We'll get into it. I know we didn't. At least I didn't have a Zoom last week just because of some volleyball. So I definitely wanted to get in tonight and knock it out. So how's everybody doing? How many? Yeah, there's a couple people on here, bro. Yeah, absolutely. Yeah, I'll be honest, man. I've been exhausted, man. I mean, trading isn't the only thing I do these days. I do a lot of other stuff, and man, I'm just between traveling and kids sports, and me trying. I'm very driven on stuff, right? And you guys are gonna laugh, but I'm very driven. When I put my mind to something, I always try to accomplish it. I go through whatever I need to do. And here I am. I just had a birthday last week. I had a birthday. I'm 41 now, 41 years old. And I've been staying up till like, I don't know, like 1 o'clock in the morning working on stuff, but also trying to, beat the crap out of some DMZ in Modern Warfare so that I can get up to level 5 on all these stupid little tasks. I'm one of those people, like when something's there and it's a task, I've got to get it done. So that's what I've been doing. But yeah, cool. So let's dive into it. We've got a lot going on. There is a lot of fundamentals on the horizon that are really going to start to give some direction to the market. I was doing a Zoom today with somebody, and we were kind of just going over like schematic recognition, right? Just like previous schematic stuff out of my journal that I like screenshotted, that I traded. And we really were targeting the first quarter of 2021 because that's I looked back in my journal in 2020. First quarter of 2021 was I just had an immense amount of trades. And I looked at the price action. I was like, man, this price action is freaking phenomenal. I mean, like it was just the cleanest price action. I mean, and you look at what we're getting these days, and yeah, it sucks. It is what it is. But what do you got here? Hold on. Still a 20-year-old at heart. Yeah, man. I tell you what, I'm for those of you guys that are married, I am coming up on my 20th wedding anniversary. Actually, tomorrow night is going to be my 20th wedding anniversary. So 20 years, man. It's crazy. It's I remember being 21 years old. That's how crazy it is. So but yeah, let's dive into it. Let's go through. I'll kind of give you an idea of what I'm looking at. I'll kind of give an idea of what I've been anticipating. One of the things I told myself that, and this is what especially the people in my like trading group, that I really wanted to focus a little more this year on was the fundamentals. And I really took that to heart. I've really started to immerse myself in economic policy, understanding what certain actions by central banks, what governments, all of those things really have a direct influence. Understanding like the economic cycle. That's something that I look back 15 years ago, 10 years ago, I had no concept of what it was, and now I'm very, very versed in it. I understand it. And yeah, it is what it is. So we'll talk about it. You were 8 years old. You were 8 years old when? 20 years ago? I'll tell you what, 20 years ago, where was I in January 24th? I could tell you exactly where I was. January 24th, 2003. I'd had already been, let's see. So the invasion happened March of 2003. I was gearing up. I was probably either up in Fort Benning, Georgia, around this time. Actually, probably right now at this exact date and time, I was probably jumping out of an airplane in Fort Benning, Georgia, to get our last training flights in before we deployed. And February 2nd, 2003, I boarded an American Airlines flight with the rest of my team, flew to Heathrow. From Heathrow, we flew to Germany. We spent a week in Germany and on to the Middle East. So yeah, 20 years ago this month, I was probably spending the last few days with my family before I went off to war. So yeah. Yeah, it's crazy, man. It's crazy. You were 5. You were 5, and I was at the front lines of a war, man. Yeah, that's crazy. It's crazy to think. So yeah, it is what it is, man. Um, yeah, I look back. I was just at I think so my oldest daughter is a senior in high school. She's she'll be 18 pretty soon. And yeah, it's crazy to think that, you know, in less than 7 months, yeah, less than 7 months, she'll be the age that I was when I enlisted in the military. So yeah, cool. Uh Funny, you got a plane jump scheduled for Saturday. Man, I wish, dude. I tell you what, man, I would love to do it. I just don't think my back can handle it anymore, man. You know, that's that you get old, man, and it just sucks, dude. It sucks. But yeah, good, dude. Dude, that was the best part, man. I used to love freaking. I'll tell you this. I did Halo, which is high altitude, low opening, and then Lolo, which is low altitude, low opening. So it's essentially you're waiting to the last very second to yank on the string. And I used to love Halo jumps, man, because it's just you and the earth for probably a good 2.5 to 3 minutes as you're descending down. And dude, I used to love that, man. I used to love just how quiet and calm, everything was. So there's no say. Yeah, you don't have a reserve shoot on a low, bro. And there ain't enough time to deploy your secondary. So you better pray. I'll tell you right now, that's why 2 guys in our team were riggers. And that's why I made sure that one, I took care of them. I was like, every time we go out, I'd buy them whatever they needed. Hey, you want some food? And then I used to always make sure if we were going to be doing a jump anytime within 48 hours, I was like a hawk, bro. I'd watch what they're drinking. No, bro, you don't need no alcohol. You're not having alcohol. Do you really want to eat oysters? I mean, maybe what if you get like, like some upset stomach, or check that chicken. I was that guy to make sure that they were on their A game when they're packing my chutes. So um so is the earth flat or is it round? Oh, I'll tell you right now, it's definitely flat when you're up there, man. It is definitely flat. So, well, let's dive into it. Let's jump into it. Just because I do not want to be on this call all night. I've got some stuff I've got to do later tonight. And yeah, we'll go through it. All right. Starting off, fundamentals, right? Everybody knows what's next week, right? There is probably 2 of the largest news events are going to transpire next week. Everybody know what they are, right? What's the 2 biggest news events that are going to happen next week? Come on. No idea. Oh, you got to know this by the back of your hand. Yeah, our NFP is one of them, right? NFP is one of them. First Friday of every month, and interest rates, right? We have the Fed releasing their Fed funds rates on Wednesday of next week, and we have NFP on Friday. And why is so let's talk about the first thing, right? Let's talk about the jobs reports coming out. Why is this jobs report coming out going to be very, very influential? And I'll tell you right now, this call tonight is probably going to be a little more fundamental driven. We'll look at some charts, but I really, really want everybody to have an understanding of what's potentially on the horizon and how to prepare yourself for the markets to react. So what is the biggest what is the reason? And I mean, I guess you can honestly probably go into a long paragraph on what the expectation and ramifications and why it's so influential, this NFP. But if you give me the layman's term or the short answer, how does the labor force affect interest rates? How does anyone want to take a stab at that before I answer it? I know everybody in my trading group knows this because we've talked about this extensively the last like 2 to 3 weeks. Why, how does it, and this will be a really good answer as to why this interest, or I'm sorry, this jobs report coming out next week is so important. Anybody want to throw it? They need less jobs so they can know to cool interest rates. No, it's actually the opposite. It's the opposite, right? So like if we talk about this, right, let's look at it. So you have everything is hunky-dory, right? Everything is great. We are status quo, right? Everybody, the economy is thriving. And then all of a sudden, wait, let's see. We'll see if their rate hikes are working. Oh, they are. Oh, all right. I'm gonna read this, bro. I hope, I got a feeling you got this down, bro. Well, we're gonna read it. Hold on. We'll see if their rate hikes are working. You know how I don't even need to look at what's going on. I could tell you their rate hikes are working. Do you know how I know their rate hikes are working? What are the two reasons we know that rate hikes by central banks are working right now? Anybody want to throw a stab at it? And then I'm going to read your answer. Housing market dropping. Nope. Housing market's a byproduct of it. Big corp cutting. Oh, that's one of them. Can anyone think of in the last 2 weeks you going one full day without a large corporation saying that they're announcing layoffs? So interest rates go up, purchasing power goes down, right? They have to start cutting costs. The first thing they do is cut labor. I put it on my Twitter page maybe like 3 weeks ago. I said the world economies are going to be resting on the shoulders of the labor market. Pay attention to what happens in the labor market. We know where the economy is going to go from there, right? So we have jobs are starting to get cut. And what's the other thing we're starting to see? The whole reason why interest rates are hiking is because of what? Inflation. Correct. Inflation's skyrocketing. So to curb inflation, they have to raise rates. Because they raise rates, businesses have to cut costs. The first thing to do is cut labor, right? So we know interest rates are working. Why? Because the inflation rate is starting to slow. We're still seeing inflation, right? Inflation is still increasing, but it's slowing in regards to what their forecast was. And we're starting to see the labor market catch up. So things are looking good. The recession is going to happen, right? But we can foresee over the horizon on what's going to happen. All right, so hold on. Let me read this real quick. So the labor force can affect interest rates in a few ways. Unemployment rate. If the unemployment rate is low, it generally indicates a strong labor market and healthy economy. Yes, it can lead to inflationary measures and may cause the central bank, such as the Federal Reserve in the US, to raise interest rates to help control inflation. On the other hand, high unemployment rate can indicate a weak economy, which may prompt the central bank to lower rates. When the labor market is tight, employers may have to raise wages in order to attract and retain. This can contribute inflationary pressures and may lead to higher interest rates, consumer spending, a strong labor. Yeah. So essentially, this is the economic circle, right? Is this not live on YouTube? Yeah. I mean, it's live on YouTube. I thought it was. Yeah, it's live on YouTube, man. Absolutely. So okay, so real quick, we'll yeah, it is. Anyone else's audio dropping in and out? Is my audio going in and out? Hold on, let's see. It is. All right, give me a sec. Hold on. Okay. Yeah, it's my internet, man. Today most of my internet was down most of the day because they're running they had to run a new wire and bury it into the ground. So that's what I've got to deal with. Okay. So let's talk about the circle, the economic circle, right? Everything is hunky dory, right? Everything is perfect. All of a sudden we start to see inflation going up, right? So inflation going up, which means the cost of goods and services cost more, right? Now, does anybody know why inflation started to go up? What was a reason, and particularly in the last like 2 to 3 years, what was a couple of factors that caused the inflation rate to go high? So do you think they have a ways to go on increasing? Yes, interest rates are going to continue to rise. Money printer going burr. So stimulus checks, right? Stimulus checks. That's one. What's another reason? Those of you guys in the US, you guys should know one of the reasons. Businesses got scrambled up with COVID stuff. And nope, has nothing to do with that. Flooding market with cash. Okay, Julio, you're right, but it's because of stimulus. What's another reason? Nope, nothing supply shortages. It has everything to do with money circulation. So right, that's all stimulus, right? Stimulus, but what's the other thing? What's something that us as Americans voted for 2 years ago? Well, I didn't vote for it, but 2 years ago, government spending up? No, not government spending up. What happened to wages? Anyone know what the minimum wage happened? Did we not go from like $8 to like $15 an hour? Remember that? So because we're raising wages and because of stimulus, that caused inflation, right? Okay. So that causes inflation. Now, in order to curb inflation, what does the central bank have to do? They have to raise the interest rates, right? By raising the interest rates, what does that do? That essentially brings brings expansion into contraction from a manufacturing, from a business environment, right? We are no longer, businesses, when interest rates are going up, right? Most businesses work on borrowing power. Businesses are not going to expand. They're not going to open up multiple sites. They're not going to hire more employees when it's costing them more to do their business. So what's the first thing they try to do? Cut spending. How do they cut spending? Cut your labor market. So because of interest rates, right? Interest rates are going up. At some point, when the inflation rate starts to do this, they can start to slow the interest rates, right? So when they start to bend the curve, they can start to slow. And then the lagging indicator is the jobs market, because now businesses are laying off and causing unemployment to skyrocket. Okay. Once unemployment skyrockets, now they need to what? They need to essentially, just like they had to take care of the inflation problem, they now need to take care of the unemployment problem. What's the easiest way to do that? Drop the interest rates, right? Drop the interest rates so that businesses can now open up their pocketbooks and spend more money. By doing that, they're going to bring on more labor. Labor then is going to get paychecks. Those paychecks now flood the economy, so that what? We have a thriving economy. It keeps cutting out. Man, yeah, it's my internet connection, man. It's all right. It's recording. So if you guys want to rewatch this part of it, you guys can. I'll upload it on YouTube tonight. It's my internet. It keeps saying unstable connection. But anyway, so in a nutshell, right? Interest rates are going to continue to rise until what? Until two things happen. Until we start to see a decline in inflation, and we start to see what? We start to see an increase in unemployment. And at that point, that is where they're going to now flip the switch and have to lower interest rates in order to take care of the jobs problem. Does that make sense? So it's a big circle, right? What we have here is a big circle. So you have great, right? Inflation. Because of inflation, you have rate hikes. Because of rate hikes, you have unemployment. Because of unemployment, rate drops. and then we're back to great. And then we just keep doing this circle, right? You guys want to look at, some interesting data and stuff like that. The last recession in the United States was in 2008 to 2010. Go look at the data. You can pull it up right up here on Forex Factory, right? All you got to do is just go, you come over here and look at funds rates, right? You can look at the jobs market. Come over here and look at what the unemployment rate was. Go over to the graph. And you can see, okay, so let's take a look at this. What do we have, right? We can see in 2008, we could see the unemployment rate rising. Why do you think it rose so much here, right? Because they had to raise the interest rates. If you now correlate that, right, in 2008 with this hike, if you look at inflation and you look at what happened in the funds rate over here, you can start to see, well, okay, wait a minute, what happened? There you go, right? You can see the rates increasing. The lagging indicator is the jobs market. And as they start to drop the rates, that's when the jobs markets comes back into it. So the labor is always going to be the lagging one, right? Labor is going to be the last indicator before we either exit or enter the recession. All right, if that makes sense. Okay. So hopefully it does. Hold on, bear with me. There we go. Yeah, hopefully that makes sense. Did you guys at least catch the last part of that, or did the audio still kind of kick out? Yeah, you got it. So yeah, I mean, it's very important to understand that because, let's just look at it like this, right? As the Fed continues to raise interest rates, is there any reason to doubt that the US dollar is going to continue being stronger? That strength in the US dollar will continue until the Fed decides to stop raising rates. And I'll tell you right now, you can see they're forecasting only a 25 basis point rate hike. It's still a rate hike, but they're only doing 25 basis points. One of the things I was reading this morning is the ECB is actually going to be taking an aggressive approach and is contemplating now, and they're forecasting a 50 basis point rate hike on the ECB. Well, if the ECB is going to come in with 50, I guarantee you the market is going to react that the Fed is going to have to come back up with 50 basis points on the next FOMC. So there's a lot of volatility ahead of us. I'll tell you right now, the two factors that you want to pay attention to, actually three, right? The first is the labor market. Keep an eye on the labor market. As we start to see unemployment rise, that is going to be the indicator that that interest rate hikes are working. Okay. Until you start to see inflation, until you see the jobs rise, right? The unemployment rate rise, but you start to see inflation start to come down. That is the indicator that the Fed is going to stop raising rates. And as this goes down, but this continues to rise, that's when you know that they're going to drop the interest rates. All right. So those are things that you want to just pay attention to, because it's going to give you a basis of what to really look for. Again, I'm not bearish on the US dollar until I see this happen, right? I'm not ready to start buying indices long term until I see this happen. I'm not ready to jump into a risk on sentiment until there's a reason for the market to react in that kind of behavior. Does that make sense? And if you hear that yapping dog in the background, I'm going to shoot her. Yeah. Does that make sense from a fundamental standpoint? Does everybody kind of have an understanding of that? So with that, right, what do I have on tap? Like, what am I preparing for? Okay. First and foremost, what I'm going to be looking at, okay, is, and we know that tomorrow morning we have the Bank of Canada that is doing their rate hike. They're going to be doing the standard 25 basis points is what the anticipation is. I can guarantee you this. If they raise the rate more than 25 basis points, expect bullish Canadian dollar. So knowing that, right? Knowing that if we have a bullish Canadian dollar, what should you be looking to do with UCAD? Anybody? Yeah, absolutely. You want to be selling UCAD. Why? Because UCAD is the diametrically opposed asset to the Canadian dollar, right? Canadian futures is the inverse of UCAD. So if we see that the Canadian now, I personally, everything I've been reading, I don't see a reason why they're going to come in anything over the 25 basis points. I think they're going to come in just as forecasted. If that's the case right now, for me, the Canadian dollar is bearish. I'm looking for only buys on UCAD. So, for me, on the Canadian side, I'm looking for AUDCAD, NCAD, just like I have been for the past months, and then UCAD, right? I'm looking for buys on UCAD and bearish ACAD and NCAD, right? That's what I'm ultimately looking for. And we are still very much in a risk off environment, meaning for me, that means that US dollar continues bullish. That means that anti-per diems such as the Canadian, the Kiwi, and the Australian dollar are still bearish, right? That's why I don't need help from the US dollar to sell AU or NU, right? Or buy UCAD. I don't need help from the dollar for that. Do you believe the soft landing the Fed is saying? Okay, so here's my personal opinion on not what the Fed is saying, because the Fed is just talking out of their butt, right? The Fed is just doing whatever they can to appease the market. But when you hear these analysts that talk about that the Fed potentially will pull off a non-recession interest rate hike, right? They're saying that they are gonna, and that's the quotage is soft landing, right? Let me just put it like this, okay? Never in the history of the Federal Reserve, and the Federal Reserve has been around for almost 100 years. Woodrow Wilson signed the article into law to create the Federal Reserve, right? It was authored by, the great families, right? Never in the existence of the Federal Reserve have they been able to raise the rates at the rate that they've been doing them, not affect the jobs market, and not put us in a recession. Never has that been done before. And now, and again, this isn't a political statement, but now what we're talking about is working with the Treasury Department, run by a bunch of clowns, in cohort with the Federal Reserve, who, if you ever listen to Jay Powell speak, he speaks like he's a very smart man. But I guarantee you, if you actually listen to the words he's saying, it's the dumbest idea sometimes. You're talking about creating a miracle by essentially not entering a recession. And it's on the backs of the policies and implementations that the Fed, that the Treasury Department, and that the current administration that is running the U.S. government is implementing, right? I don't see that happening. I'm personally not willing to bet the house on them pulling that off. I'm going to go with what history tells me. And history tells me that you raise the rates and you start to see unemployment go up. That means that the recession, and by all accounts, we've entered a recession. If you listen to any of the articles that Alan Greenspan, who is the previous chairman of the Federal Reserve, has been putting out, he's telling you that there's an impending recession, that the economy is in for a treat when it comes to pain and suffering, because we haven't plateaued yet. We're still at the bottom floor. We need to get up into the higher percentages in order for this to actually take foot. So, that's my opinion, right? Take it as you will, do your own research. But I'm not betting on a soft landing and the Federal Reserve being able to pull off this miracle right now. If you really follow what's happening, it's a bunch of smoke and mirrors, right? If you look, and the whole reason I brought this question up was because the jobs report on Friday. Why is this jobs report so important? So the last labor reports that came out, all right. I talked about this with my team. There is a standard in the Department of Labor. Well, let me throw it in like this. First and foremost, all of this data is tabulated through surveys, right? Through surveys. Okay. And since COVID, the survey response is dismal. Okay. One of the surveys that they use that prior to COVID, they were getting somewhere in the 80% response rate is now only about, I think it was like 38%. So we're basing data off of a 38% response rate, which is garbage. Furthermore, they're picking and choosing what surveys they want to use. And when I mean they, I'm talking about the labor department, because that's who's releasing these data, this information. They're picking and choosing. They're not, the standard was you pick one survey and use that survey for all the data. What they're doing is they're picking and choosing the data from different surveys that pretty much show them being successful, not with egg on their face. Next Friday's jobs report is going to be so important. Why? Because it is the data that shows the seasonal hiring and firings, right? What happens in October and November of every year? We have the holidays. What happens to businesses? They go on a hiring frenzy. So that's why your jobs numbers were higher than what they expected last October, last November, and this past one in December's numbers. Now that Christmas and all the other holidays are over, what do they do with that labor? Well, they're seasonal, so they lay them off. So when that gets reported, can you imagine that the unemployment rate will rise? Yes. And if it doesn't, they're full of crap, right? Because it has to. There is no doubt about it. People are not going back into jobs, especially when the last 2 weeks I turn on the TV and the only thing I hear about is Google laying off 25,000 jobs, Microsoft laying off 2,700 jobs, Amazon laying off 5,000 jobs, Tesla. Let me ask you a question. Why did Tesla, and this is a good for fundamentals, why did Tesla reduce their prices by 20% on their cars? Anybody know? Anybody know why Tesla dropped the price, lower demand? And and you're absolutely right? Supply is high, demand is low. Why for the Fed tax? Well, Musk did that so that they can qualify for the tax, right? Because no one's buying. Why is no one buying? Why is no one buying? No, it has nothing with tax. Because the rates are ridiculous to finance cars, and people have no money to spend on it, right? They don't want to spend that cash. That's the problem, right? That is the issue that you're seeing. And yeah, I mean, that is the first thing. So think about it, right? 6 months ago, 8 months ago, we had high demand, low supply, right? Supply shortages. What was happening? Inflation was happening. You were paying. I bought a car. I paid like $3,500 over asking price because that's what you had to do in order to get a car. Okay. When you start looking at what's happening, Tesla is jumping on the train. They want to offload what they have to still make a profit before all these other automakers do that. Right. So people aren't spending. That means if people aren't spending, that money's not being circulated into the economy. Right. So think about it. Right. We have high rates. We have businesses that are being constricted in their spending. So because of that, they have to cut the labor market. Okay. We're going to see onset of unemployment rise. Is there anybody here that's like, you know what? Well, I was just going to say that no disposable income. I was just going to say, is there anybody here that's got extra cash that's like, you know what? Let me invest this in the stock market. Let me invest this in Tesla. Let me invest this in all of these things. Is that a, if you look at COT reports on a lot of the commercial stuff, commercials are all the institutions. If you look at the commercials, right? you don't see a very large influx of new orders coming in. Aren't they also changing the definition of measuring inflation? I think from 2 years to now 1 year or something related. Man, yeah, it's there's all kinds of stuff. There's also a little bit of a scandal going on in like November's inflation numbers when they were released. There was something like 40 or 50% extra volume that was traded 2 minutes before the release. There's all kinds of there's a little bit of stuff going on with that. Okay. But all of these things are something that you want to start paying attention to. Not long ago, when I first got into trading, did I think, oh, I just look at the chart and I know what to do. I can tell you that I've really dedicated a lot of my time in the last 2 years to understanding the fundamentals. And it's really, one, helped me from taking a lot of unnecessary losses. But two, it's helped me understand long-term plays. Why I can get into a trade. I'm still holding a couple of trades from September and October of 2021. Okay. Those are things that really help me. Yeah, they're doing a bunch of shoot. Yeah. I call it smoke and mirrors, right? Yeah, it is. It's whatever they can to fit their narrative. And that's the point, is pay attention and listen. For me, I'm just not a one source thing. Like, I don't just go to Fox Business and read those articles and listen to those analysts. I do Fox Business, I do Bloomberg, I do CNBC, and I read through the BS, right? Once you have an understanding of what's going on and you can see the data, I've said this before on these calls, right? For me, this is a business. It's not just trading, right? I just don't trade. It's a business. And in this business, you need to do two things, right? You need to problem solve, and you need to employ some critical thinking, right? You've got to think outside the box, and you have to really analyze and understand what is happening, and then make a decision, an informed decision based off of risk parameters to determine what, when, where, and how you're going to make your next move. Once you can do that, once you can figure that out and put that and implement that plan, I'll tell you right now, physically trading becomes easy. Okay. So yeah, what kind of material did you study to really? Alrighty. Well, we're going to try this one more time. Flipping internet, man. Flipping internet. Hold on. Give me one sec. Hold on. I just want to see what the heck is going on with my internet. Dude, they literally just ran a brand flipping new line, man. Hold on. Just unreal, man. Uh Dude, they flipping A, bro. All right. Anyway, I don't even know where I was at, but yeah, it's the I'll tell you right now, for someone asked, like, how did I learn all of this? I'll tell you right now that the couple of things that I did do is on YouTube. So on YouTube, everyone know the Massachusetts Institute of Technology, MIT. So they actually have an open source course that they give to business clients. And uh, so here, this is it right here. This is what I started. This is what I did maybe like 2 years ago. You come here and you can, they've got them all broken down by subjects, but you go down to humanities, right? And you can see under humanities and social sciences, their courses on intermediate, microeconomic theory, development of economics, psychology and economics. So here, I'll tell you what, I'll just drop this right here for anybody that wants it. There you go. And I'll throw it on YouTube as well. But that's ideally what I watched to start with. Hold on, there we go. So this is what I started with. Nope. That's not it. Give me a sec. MIT gonna get some weird. Yeah, yeah, yeah. I'm sure it will. Hold on. Let me just share it over here on YouTube. There we go. Okay, cool. So there it is there. Anyway, that's where I started. And then from there, I actually took a couple of business courses at my university. If you guys don't know this, so I have a master's degree. And my master's degree, it's an MBA with I kind of went the human resources route for it. But I did purposely take a lot of finance, a lot of economic and global economic courses in it. So that's another thing I did. And those, I mean, even if you don't want to actually study in a university, you can find that crap online. And then from there, it's, live and breathe, I used to watch my local news station, 1 or 2 hours every day, while I'm cooking dinner or something like that, just vegging, I'd be watching the local news station. And honestly, that's all crap. So now what do? I've always got in my office during my trading hours, I've got Bloomberg TV on. When I'm sitting in my back porch or if I'm driving, I'm listening to podcasts, right? I'm listening to I've got a couple of podcasts that I listen to that every episode, it's something different on economics, on, and it's not just boring crap, a couple of the podcasts I listen to really focus on crypto and going in detail on, things that, I've been in the crypto space 4 years, 5 years, and I didn't know about. So you really want to, let me see, hold on. Let me see. What I'll do is this. I'll drop it in the Discord. Hold on. I will drop it. I'll screenshot it and you can just search them. Hold on. Let's go to. So I listen to them on Spotify. All right. So here, this is what I'll do. So I'll drop the screenshot on Discord just so you guys can have it. But that's definitely something that has helped. Like, my kids laugh at me when we go on drives because I'll have my AirPods in, or if they piss me off, I play it in the car, and all four of them can listen to, the lineage of USD Tether and how it came about, or the, micro and macroeconomic policy of why the cost of eggs is increasing. Those are things that interest me because they have a direct correlation to my business, right? My business as not only a trader, but an investor. And do I follow Coin Bureau? I do not. I do not follow Coin Bureau. Yeah, hold on. Stupid Discord's taken forever, man. Wow. This is something. All right, so we'll move on. When this opens up, I'll drop the screenshot in. So, but yeah. But anyway, like I said, hopefully it gives you a little bit of understanding. And I'll tell you right now, I know a lot of people, especially again, in the guys in my group, that will attest that the fundamentals is very, very important. And I personally never thought that they were. Yeah, I never thought that they were until I started to incorporate that into my business. I do not. Yeah, bro, I do not. Yeah, you asked me on YouTube. No, I don't know. Send me the link. I mean, I'll check them out. Yeah. I'm just very leery sometimes on especially if it's crypto related, because a lot of these guys, especially on YouTube, man, they're yeah, I'm not going to speak out of my butt about it. I mean, maybe this guy's freaking rock solid on his fundamentals, but a lot of times it's you've got to look behind like the shadiness of it. So anyway, let's dive into it. Let's look at the charts. Sorry, glitch. Yeah, yeah. Well, it's because you're out in the boondocks, man. You've got it worse than me, I think. Yeah, 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 absolutely. Always, I'll tell you right now, you can never have too much data. You can never have too much that you read. Now, would I say spend every living minute? No, but I mean, listen, I wake up in the morning, I have a cup of coffee. While I'm having a cup of coffee, I'm on my iPad skimming through Bloomberg, Wall Street Journal, Fox Business, CNBC Business, Yahoo Finance, right? I'm just skimming through articles. I'm reading to see, okay, what's up, what's coming. I'm looking at, I like to trade indices. Well, I'm looking today, right? Today, who traded indices today? Anybody who traded the S&P 500, specifically S&P 500? Anybody? You looked at them. Did you happen to see what earnings reports were coming out for? 3M was the big one that was coming out, right? 3M came out, and anybody see what 3M did? Look at the gap at market open. What this bad boy did. This thing dropped like 5%. This was one of the. This is a large partner in the S&P 500 at market open. Look at this thing dropped 6.5%. Yeah. So Microsoft, no, it was 3M. It was, I mean, 3M was the larger one that I wanted to see. Microsoft was at closing bell. Yeah, yeah. So it didn't have any influence on what it did during trading hours. So, and that's something you want to look at, right? You want to know, if I'm going to be trading this, what is actually going to be released, because that's going to influence, at least in the very short term. If you guys are taking trades like off the 1 and 5 minute, you know, you want to see what's going on. There's a reason why indices sold off, right? Now, I know the Dow actually traded higher, but if you look at what the rest of these bad boys did, you know, these things ended up trading lower, and look what it's doing now. I mean, all it did was just come right back into the point of interest. And I mean, I'm no Wyckoff genius, but man, that thing looks like a pretty damn good type one. And I'm pretty sure tomorrow morning when I wake up, we're going to be down here. You know, ideally, I can see what's happening already. So make sure that you understand, especially if you're trading indices. Who's reporting, what's happening, what's going on with it, right? All right, I'm gonna drop this screenshot in my ideas thing. Hold on. There we go. So this is some of the podcasts that I'll listen to. There we go. All right, cool. Yeah. Yep. So there was, yeah, it hit the circuit breaker. Yeah, on 3M. Yeah, it hit the circuit breaker. Yeah, absolutely. So, I mean, those are key things that you want to really look at. All right. You know what? Hold on. Bear with me 1 sec. I got to turn a couple of things on real quick. I just looked at the time. Hold on. All right. Sorry, guys. Hold on. I've got a couple of things that I've got to turn on. Real quick, if you guys have any questions, throw it in there now while I'm doing this, because I've got to turn a couple of things on, a couple of traders. Am I looking at UCAD for the week? I am looking at UCAD. I'm looking at buys on UCAD. And I'm not that I'm doubling down on UCAD, but I'm expecting Canadian dollar to continue bearish. because I don't anticipate them exceeding their 25 basis point rate hike tomorrow. All right, get that up. So yeah, I am looking for buys on UCAD. I was actually looking at buys this morning, but we didn't break the high that I wanted it to break. I was really hoping for a reaccumulation, and it never gave me that. So, which was kind of a bummer, but it is what it is. All right, so that is open. Yeah, and here while we're doing that, let's jump over to the dollar. We'll take a look at what dollar is doing. And let's see. 1, 2, 3, and 4. Oh, there we go. All right, so we're rocking and rolling. Throw that on. That one. There we go. All right, we're golden. Cool. All right, I'm all done. I'll go back and take a look at all those in a minute. Okay. When you listen to podcasts and news, do you have a checklist like with trading or things to look out for, aka printed news articles? Yeah, I mean, I'll tell you this. It is like I don't have an agenda like what I'm doing. What I'm looking at is I'm looking at what articles are showing signs for the key things I'm looking for: labor market news, inflation news, rate hike news. Those are the three things I'm looking at, right? And when you, like I said, you read an article that says Amazon's laying off 10,000 jobs, that's going to affect labor, right? So you start putting the pieces together. Like if I had to describe in my head what it feels like this. It feels like I'm reading an article here, 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 and here. And I feel like I'm doing like this. Well, that is tied to that, which ties to that, which ties to that, ties to that over here. That ties to that, ties to that. That's what I feel like in my head is happening. Like I'm starting to like analyze and I'm like, okay, so everything I just read this morning is telling me that's like, when we jump on the Zoom call in the morning and I'm like, all right, I'm only looking for buys on S&P and NASDAQ. It's because what I've read this morning and what I read the previous day. And then I look at the chart and I'm like, yeah, there's no reason for me to look for buys, right? Or vice versa. There's no reason for me to look for sells, you know? So yeah, I wouldn't say per se I have a checklist, but and one of the things I do is I take notes on that. So I have, you guys know I like to use my notes app because it's across all my platforms. Um, I like to take a lot of notes. And, I literally will do that. I will just write down, okay, Amazon jobs, Microsoft jobs, 3M jobs. You start writing all this down and you're like, well, wait a minute. All of these are in the S&P 500, and, you start looking at, well, okay, the unemployment rate is probably going to rise. That means that, potentially we may start to see a rate reduction, but then you look back at some, you start digging into that and you're like, yeah, but we're nowhere, we're not at the curve bending part of it yet, So let me delete this. There we go. Can you repeat the three markets again? You said, what do you mean? Oh, like the three things I'm looking for? Yeah. Labor, inflation, and the rate hikes, right? Interest rates. I'm finding that news on and trading are just bases on home runs of tying it. Yeah. Like when they can commingle, when you can intertwine the fundamentals and the technicals, man, those are I'll tell you right now, that's when you like really, really start to enjoy trading because you're putting not only that, but I mean, like, so one of the fathers in my daughter's volleyball team, he's a big funds trader, right? He actually, there's a couple of traders in our circle. One of the dads, bro, he is loaded, man. I think he manages like I want to say it's like a $5 billion fund is what he manages, and the other guy, I mean, he works for a big firm, but I think he's only at like 500 million is what he's trading. But yeah, we talk about fundamentals all the time, and I'll be honest, like a lot, I would say like close to like 60-70% of the ability to tie it together is from them. I mean, the one guy, I mean, he's in his 60s, so he's got 20 years on me. He's been doing this since he was 20 something years old, so getting that firsthand knowledge and, sitting there and just the scuttlebutt between it, understanding it, bro, that's for me, that's invaluable. Um, yeah, absolutely. Absolutely. All right. So cool. Let's dive into what the heck is happening on the dollar. So first things first, we talked about it last week. The dollar's been here for a good 2 weeks now. And if you remember like 2-3 weeks ago, I had said that I'm not looking for a 5-minute schematic on the dollar. I want us to be here for a while. I want us to really start to build some kind of intent on what the market wants to do. Now, from here, when I analyze this schematic, we definitely have a nice range. And we definitely have evidence that buyers are in the market, right? We can see that buyers are showing up, right? We're seeing that. Now, the only thing that I now am lacking from the dollar, right? What's the one thing that would put all of this and really, I guess, be a defining catalyst to bullish dollar? What is missing from this? So, I mean, BOS to the upside. Yeah. I mean, you're right. Fed flip. Well, what do you mean by Fed flip? Yeah. What do you mean? It doesn't need a spring, right? We don't necessarily need a spring, but what's the one thing, spring or no spring? What's the one thing? And you guys are saying BOS, but what's the BOS represent? A change in interest rates habit. No. I mean, their habit is they're increasing rates. If you listen to what Powell and FOMC said last Tuesday or last Tuesday, yeah, thank you, bro. Sign of strength. You got it. They said that they're going to continue raising rates through the summer. So I don't think a change in what they're doing now, what the market is pricing in is that the rates are going to continue, but they're going to be decreasing the amount in which they're raising the rates. And I think that is, I mean, I'm no analyst, but I think that's a little premature, especially when, I'm no analyst, right? But I can put two and two together. And if we are coming out of December where we know traditionally our unemployment does not really have a direct correlation to what the true market is showing because of the seasonal hirings, I think it's a little premature to say that, oh, hey, we've turned the table, we're going to have a soft landing. We have accomplished the impossible, I think it's a little premature for that. So, but I do agree with, if the Fed comes in with higher rate hikes, watch out, man, because dollar is going to scream to the upside. Honestly, I think like at that point, I might just hit buy by market on or sell by market on dollar crosses and just ride the wave. Because I honestly think that, I mean, we potentially could see dollar make an all-time high over the next course of, say 6 to 8 weeks. But right, absolutely. Sign of strength, right? That's what's missing out of this is we don't have a sign of strength, right? Like if I'm marking out this bad boy right here, right? I would say preliminary support, and our very first change of character would be here, right? And this would be our well, I take it back. Hold on. This would be our first change of character, our climax to our rally. So this defines our trading range. This would be our secondary test. That secondary test gives a nice push, right? This would be another secondary test, which gives us a UA. All right. And then we get our spring. So potentially this is our spring. Now, I really wanted price to come in, test it, and go, right? That's what I want to see. If we do indeed end up coming and making a new low, all right, so be it. Then, it actually helps out because I don't need this break to happen. And now what we can do is we can just ride this a little further, and ideally what this is just the old Pac-Man, right? We got higher highs and lower lows. It's the old Pac-Man. Let it ride and wait for the sign of strength. So the one thing I do know is this: whatever is happening, right? Whatever is happening in the dollar at this point, it's more to the buy side, and we can see the orders coming in on the buy side. We don't really see a tremendous amount of sell orders coming in. So, for me at this given moment, this morning, what I wanted to see the accumulation that happened during Frankfurt. I wanted to see us break at minimum this right here. And this is what I was waiting for on EU, was this break. If we get that break, I can at least start to be maybe a little bit aggressive, but it's premature for me to do anything with EU while we're still playing within order flow. For me, it makes no sense. There's too much risk involved in that. All right. So, at minimum, I want us to break this. In reality, for me to even start setting limit orders, it's got to be this high, because this is now what's maintaining the order flow. We're bearish from here. All right. Does that make sense? So, going over to like EU, on the EU front, this is where we're at. And you can kind of see what I wanted price to do was this right here. I really wanted us to break at least, because we've got, this is the high, this is the next high. So that means this is what was maintaining the leg. I needed us to at least break that. And we couldn't even do that. So like, I'm just sitting on hold with EU until we break this low. Okay. And really EU is the only one that I'm kind of just sitting back and waiting for dollar, because EU is the only one that's really being driven by the dollar. Right. All the other ones, AU, NU, I honestly, I can't tell you about UCHEF because I haven't looked at UCHEF, but, UJ, GU, they're all being driven by the respected futures markets of that correlating asset, so this is what I'm kind of looking at with EU. Now, we're not, it's still very optimistic to think that we could see this. Right. But EU at least is showing signs of sellers and signs of bearishness. Right. You go over to GU, and GU, in my opinion, is the complete opposite. Right. GU is very, very much bullish. Am I playing a reaccumulation on EU? I am not. I'm not doing anything with EU. I'm going to wait for dollar to give me the answer on what to do, right? If dollar makes a new low, okay, then reaccumulation on EU. If dollar shows signs of strength, right, and confirms bullish intent, then it's shorts on EU. Okay. On GU side, right now, where we're at now, and I do know, right, we could, right now, this is the H1, right? This could just be a massive distribution where we're in, climax to rally, right? Maybe to a secondary. I understand that, because we do have a massive supply area to the left. But as of right now, this was a sweep of liquidity, and ultimately your distribution, your redistro, your accumulation, and we just broke the high, making this one massive reaccumulation. So in reality, I was looking to short GU to at least my slingshot, or, 50% of our spring right here is 80% of the entire move of the reaccumulation, right? So this is obviously where I'm anticipating price to come. So like, if you measure out this entire move, you could see that, if there was ever an X marks the spot on where I would be looking for some buys, it's going to be right there. All right. Will I buy? I'm personally not looking to buy EU. I'll buy GU, but I won't buy EU. And I guess more because I'm heavily biased in anticipating the Fed continuing to raise rates and I'm just seeing the writing on the wall with the labor market, it's going to happen, right? Jobs are going to start to overshadow what the Fed is doing. So I'd rather play something that I'm 100% confident on, not just, I don't want to be at the blackjack table and, anticipating what the dealers got and trying to double down or trying to split my pair. So I'm just going to sit back and do nothing with it. But on GU, I'm ready for buys on it. I'm going to be looking to long it out of ideally like this area right here. It's out of this. I do have an alert at 50% of this whole thing, because if we do come into the slingshot, I will do it, because we do have a little bit of manipulation, right? This right here getting mitigated, potentially going higher from there. So anything in here also gets me to take a look at GU. Now, let's throw this out there. So I'm potentially bullish GU, waiting on what dollar is going to do, but ultimately I'm favoring the shorts on EU. What do I want to do with EG? What do I want to do with EG? Anybody? Bueller? Nobody? Maybe the internet went down. You want to short EG, right? All right. So if I want to short EG, if I'm trading EG, if I am going to be looking to trade EG, what charts should I be looking at? What should I be taking into account with EG? Dollar. All right. Dollar's a good one. What else? Futures. Which futures? Which ones? Come on. Pound futures, right? Pound future. What's the ticker for pound futures? Who knows it? Off the top of their head. 6B1 exclamation. There we go. Good job. Good job. What's the other one? Euro. Someone says Euro USD. Yep. Euro USD is a good one to look at as well, right? It is the diametrically opposed to the dollar future. What else do I want to look at? I want to take all this into consideration from a comparable strength, right? So what else can I look at? I'll give you guys one. We already talked about it. Pound US dollar, right? Because that is the inverse diametrically opposed asset to pound futures. What's the other one we want to look at? Yep, Euro futures, right? Absolutely. Right. This is when I'm looking to trade EG, these are all the things I take a look at and see, is there something that gives me an edge? Is there something that gives me divergence? Is there something, I mean, and I know a lot of you guys have seen this. Is EU is different from, yes, EU is different from Euro futures. Absolutely. Just like here, I'll give you an example, right? I'll give you an example. And because I haven't looked at Euro futures. What do you mean besides? And yeah, absolutely, it's different. Yeah, let me hear. We're looking at GU right here, right? We're looking at GU. Okay. I want you to pay attention to this chart right here. This is January 18th at 8 o'clock in the morning. See this high right here? This is January 18th at 8 o'clock in the morning. You would say that this is not a break of structure from here, correct? Am I right in assuming that from your standpoint, that you would not call that a break of structure, right? Okay. So now what if I go over to pound futures and we look at the same chart and we look at January 18th, which is right here, January 18th, would this now be a break of structure for you? Absolutely. So wouldn't it be good to see, and the futures market is going to trump what's happening on the currency market. Why? Because the currency market is susceptible to manipulation. So if I've got that, right, cheat code, if I've got the ability to look at different views, right? So for me, I can look at EU, yes, but if I look at euro futures and dollar futures, that's going to tell me exactly what I need to know. If there's any discrepancy in the EU chart, I can revert back to the futures market. Okay. So, I mean, are they very much different? No, but they're going to give you the answers. If you're in a bind and you're like, man, I just don't know, look at the futures market. You know, not only that, but you should make it a habit. I mean, I do it minimum once or twice a week. Am I looking at the futures charts just to get an idea of what's really going on? Because the futures market is what is physically being traded on the institutional level. Okay. So yeah, anyway, getting back onto it, if I'm looking at those, right, and now I jump over to EG, okay, if I jump over to EG, is EG giving us a reason, right? Is EG giving us a reason to look for shorts? It's not yet. What more do you need to look for shorts? What more? What? Yeah, I mean, what else would you want to see on the EG side? Right. I mean, yeah. I mean, we could see the box, right, and follow my arrows. But are we? Are we? Can I? Is it safe to assume that I am not looking for buys on EG? Right. So if EG, right, and this is how you can correlate everything. If EG is yelling at us to sell, and GU is yelling at us to potentially buy, right, then we know that on the EU front, we need to start looking for shorts. I clearly see the short, but doesn't the area we just came into count as an accumulation that made a new high? An accumulation that made a new high. Sir, here, hold on. Do I have annotate on? Give me a sec. Circle what you're talking about, bro. Yeah. Hold on. There, you can annotate on it. There you go. What are you talking about? You talking about this right here? This accumulation? Okay, that's not an accumulation. That's a reaccumulation. But what did it do? Let's hold on. Let's look at it. Give me a sec. Let's look. Let's work higher time frame down. Let's build the case, right? Your Honor, I present my case. Hold on. Your Honor, I present my case. So, is it safe to say that EG has been in a active distribution for the better part of 7 years? Yes. Is it safe to say that we have a break of structure confirming the type 1 in said distribution? Yes. Can we even go out on a limb and say that if we measure the entire UTAD, that these SOBs came exactly in to our 80% and mitigated said UTAD? Yes. Okay. So for me, from a higher perspective, this thing is going boom to the pits of hell. So now let's start working it down. So what do we see that has transpired in said area? So hold on. If we come here and look, okay, we know that this was the last buy order that gave us this immaculate move here. And we have broken that order flow here. And for all intents and purposes, what we have here is we have the test of that distribution. Okay. We have a redistribution in here. And now what do we have here? Would this be safe in saying accumulation? Would everybody be perfectly happy saying accumulation? There's a high, a low that broke structure, imbalance, and also a failed high. Okay. All right. So an accumulation, right? Has this accumulation swept out any weak-handed sellers here, here, and here? The answer should be yes. Are we seeing evidence of sellers coming in here? Yes. Now, why would sellers be coming in here? Well, if we come over, there we go. Oh, hold on. If we come over, did they not trade back in to the redistribution supply point? Did they not sweep out weak-handed sellers? And do they now not break this low? Do I care about this? No, not really. I don't, because what is this responsible for? A break of order flow. What is this responsible for? The break of the buys that created the test that came into the 7-year distribution. So what is my line in the sand? Well, my line in the sand is this, right? We trade above that, I'm done looking for shorts. But on the buy side, what's your line in the sand? If this now makes this low and takes this out, are you going to look for buys here? And then if we take that out, are you looking for buys? And at this point, when we're down to here, this is EG, right? This thing is going to take a month to even come back up here. So for me, can I, in a market cycle, right? In a market cycle where you have an accumulation to a reaccumulation to a distribution, that distribution now needs to accumulate to test out so that it can redistribute. And where I'm anticipating this is the shakeout of the redistro right here. So is it an aggressive approach? It is, but it's an aggressive approach with contributing articulable facts that support my bias and position, right? I'm not just going to willy-nilly sell it. Do we have a confirmed type 1? Yes. Did that type 1 do something? You're damn right. It swept out all the weak-handed sellers. Is there evidence of sellers in this forming? There is, you know. Now, am I betting the house on this? No. Am I throwing order flow risk? Yes. You know, so, you know, kind of, I mean, could I be 100% wrong and this thing go up higher? It can be, absolutely. But I know what I am looking for is the bias, the fundamentals, and the comparable strength assets incorporated into this, right? GU is looking very bullish. So that means that if GU is looking bullish, right, and we're seeing potential signs of EU weakness, that means that what? That dollar strength is potentially coming in. If we have a strong dollar and a strong pound, that means that EG is coming down. So all of those things go into my risk assessment on determining what the heck I'm going to do with this damn pair, you know? So, and that's ultimately what I'm looking at doing with it, right? I'm looking at shorting it. And again, like am I just throwing a limit order in this? No. I mean, you can see what I've got going on, right? I mean, I'm simply just, I've got the alert there and I want us to build me a pretty looking damn good distribution somewhere up here, you know? That's what I want to see. You know, and of course, if we end up doing this, right, and redistributing here, now my line in the sand is going to be here, and I'm looking to play back into something here to short it down. All right. Makes sense? Cool. All right, good, good, good. Um, all right, cool. Yep. All right. So that's EG. Um, yeah, you got it, man. Have a good one, bro. All right. So AU and NU, again, I don't need dollar is still looking weak. So I thought maybe we could see higher price action to mitigate higher. Dollar is still looking weak. You talking about higher price action on EG? Okay. So if you're going to look at it like that, and you can, what does GU need to show you in order for this to be possible off of your thesis? Does GU need to show you strength or weakness to mitigate that of the UTAD higher weakness, right? Okay. Yeah, good, good. Yeah. Is that the vibe you're getting from GU here? Hold on. Is that the vibe you're getting on GU is weakness? Because that's GU for me is the deciding factor. That's why I'm personally taking the approach I'm taking with EG. Yeah. But I was looking for continued downside price action after the most recent distribution. On GU, yeah. But what if this bad boy just comes right here, comes right into demand and goes higher, right? Or even comes here where I want to buy it from and goes higher. You know, on GU, this could literally take 3 days to get down here. I mean, heck, what are we at? 23.25. Yeah, it's 300 pips. I mean, heck, GU can sneeze and get there in 300 pips, you know? Yeah. Yeah. I mean, like I said, I can be totally wrong. The reason I'm doing what I'm doing is just from a risk assessment. Doing what I'm doing, I'm now allowed, obliging myself to a risk assessment and prioritizing what I'm doing, but also I'm assigning a measure of risk in what I'm willing to wager, or put into that trade for whatever the anticipation is. All right. All right, cool. All right. So on the AU front, on AU, I am still very much, I mean, and you could see, like, look at this. We're just continuing bullish, continuing bullish, continuing bullish. I am just waiting to see because we are in the extreme, right? We are right here where I wanted us to get into. But just like I was looking for on dollar, what is the one thing missing on AU? What are we not seeing on AU happen? Yeah, there's no damn sign of weakness, man. If it ain't going to give me a sign of weakness right, absent sign of weakness, there's no reason to sell this thing. If she ain't going to give you, if she's not showing you sellers are wanting to take control, why sell this damn thing? So for me, I am not ready to buy AU until we at minimum break this high. All right. We need to break that high for me to start buying this thing because it's no longer worth it. Right. I mean, I'm not looking to buy here. What's my target? This high right here. And we very easily can go into a distribution right here and just sell this bad boy off. So when it comes to a risk to reward, where she sits right now, like if I were to do something with AU, we have an option, right? We have my very first targets, right, would be to break this high, which is 48.9 pips. Or if I can catch a short, my targets are going to be down at this damn low, which is 910 pips. I'd rather get into one trade and ride it for 910 pips than get into a trade and go for 48. You know, NZD also made a high. Okay, well, but that's not how you determine laggard, right? If AU maintains bearishness, the Kiwi would actually be the laggard. Does that make sense? The laggard would be in this up price. The laggard would have to happen at the bottom, not the top, right? So if you think about it, if price does this and then price does this, and you have that and that, this is the laggard, right? This is the leader. The same thing on the accumulation side. You have this is the leader. This is the laggard. Okay. So anyway, so AU, I'm kind of just sitting back waiting. I want to see, it's at the point where it's got to either shit or get off the damn pot in this distribution, right? This is where I'm watching, and I mean, absolutely, right? The Kiwi has taken the high from this leg over here, right? It has taken that, but this is just order flow, right? This potentially could be, right? This potentially could be just a sweep of liquidity, and this thing can just turn into a massive distribution to come lower. This doesn't really hold or represent anything. So if Australian futures break structure, yes, yeah. If futures breaks that high, but AU doesn't, I'm not taking a distribution from there. Correct. Yeah. So and keep in mind, we had odd news come out today, right? Where is it at? We had odd news come out, and look at the odd numbers, right? This is CPI data, right? This is consumer price index. Consumer price index quarter over quarter went up 0.3%. Oh my goodness, bro! Year over year, it's from 7.6 to 8.4. So just look at what these numbers represented for consumer price index. And then let's look at actually the reaction that we got when news came out at 7:30. Here's your reaction. Do we understand why, if inflation increases, why the Australian dollar strengthens, right? The same thing could be held true for if inflation increases on the US dollar, we're going to see the dollar increase as well, right? So, and why if inflation, and this, I mean, again, this is a good fundamental segue. Why, if inflation numbers are continuing to rise, is it hawkish for the Australian futures market? What are your thoughts? ACAD? Yeah, I'll share ACAD. What do you guys think? Hawkish means futures will rise. But why? Why is it hawkish? Because now they have to take action. What kind of action are they going to take? Yes, they're going to continue to raise the rates, right? Interest rates are going to still continue to rise with inflation taking an upbeat, right? And if inflation continues to rise, fund rates are going to rise immensely, right? The bond markets are going to rise. Okay. So understanding, how many of you guys ever looked and said, all right, CPI data came in at 1.9 and they were forecasting 1.7. Okay. It's a green color, but understanding the why is so important. And then understanding the future implications. So seeing that CPI data, I'll tell you right now, I'm very hesitant to think that we are going to really sell off. I feel like, and I haven't looked to see, hold on. I can't wait, bro. Look at this. So funds rates Wednesday, funds rates Thursday, funds rates. I'll tell you right now, I won't be from Wednesday 12 p.m. to Wednesday at 12 p.m. I'll be done trading. I won't be trading Thursday during this crap. I definitely won't be trading NFP. So next week Wednesday I'll be done. But yeah, I will be very interested to see what the jobs report number and what there it is right there, cash rate. So the 6th, so Monday, the 6th of February is where the Australian dollar comes in. That's what, for anybody that's going to be trading Australian and Kiwi pairs, that's what we want to really pay attention to. So I'm asking to clarify, by the way. Wait. Oh, it was a question if hawkish means so hawkish means that there's going to be an appreciation of that. So if you're hawkish on, Australian futures, yeah, it means it's going to go up. And if you're dovish, it means it's going to go down. So the stance that the central bank, in this case here, the Royal Bank of Australia, is going to take, if the sentiment is hawkish, it means that interest rates are going to rise, right? And if rate hikes are going to happen, that means that the appreciation of that futures price is going to happen, right? So in reality, AU is going to continue to rise. Okay. So yeah, that's something that you want to kind of like incorporate into your trading, into your business. You want to have these answers, right? You want to have these understandings of the fundamentals that are at play. So AU, I mean, I'm just gonna let it do its thing. I'll wake up tomorrow morning. We'll see where it's at. I'm very much I'm very much with the understanding that we're probably going to take that high. And if you look at NU is very similar. So NU and GU are two that I'm going to be paying attention to. Like right off the bat, if AU takes that high, like my eyes immediately go to this accumulation that's right in here. That's something I potentially be looking for to play out of. You can kind of see that we have the break. The break was this slingshot here. It came back into mitigate. And, ultimately, if it comes back and makes a new high, this may be and that's why I have this alert here, because if we come into the lower half of it, I'll be looking for potential buys, but it's really going to be just predicated on what AU does. I need AU to confirm the bullish intent, and then I can start looking at buys on AU and NU. All right. On the UCAD front, on UCAD, right? So UCAD for me is very much order flow within order flow in the order flow leg of order flow, right? Like this for me is really where I wanted us to get down into. And we've been here since October, right? We haven't seen anything really happen. So for me, UCAD was a series of events that led me to get to where I wanted to kind of start putting some risk on. Okay. And what I was looking at, all right, so we have a boof. It never really invalidates supply though. Okay. So all we do is take out the one measly little redistro. We accumulate, we reaccumulate, we reaccumulate, and so forth. We do come back into the slingshot that originally breaks this redistribution. And what I told myself is, well, I want to see some accumulation. I want to see evidence buyers coming into this market. So the reason the interest rates would go higher is yes, that is the main, like if you look up, job description of interest rate hikes, it is solely to curb and tackle an inflationary issue. So yes, that is the main job description of it. Okay. So we have an accumulation. It's not the greatest, but you have your first change of character, your climax to your rally, to your test, to your upthrust action, to a test, right? To a test in B, to a spring. Said spring breaks, right? And tests out. Now we do have liquidity that was sitting here, which I figured they would come back and sweep it out. You can kind of see my thought process over here. I wanted the reaccumulation to go higher, or I wanted us to come back into here, sweep out liquidity, maybe play into this 80% what the damn thing actually slaps into, and then go up from. So far it's done what I wanted to up to that point. Now, when it came into this, right? When it came into this is where I said to myself, okay, so perfect timing, right? We have an accumulation. This is London. I like it. Gives us signs of strength. We come back into here to what? To ultimately sweep out Asian liquidity and give a type 1, but it's never followed with any real sign of strength, right? The sign of strength is missing in action. So for me, this morning, I was anticipating and I was ready to take buys out of this position here. However, once we broke this, I was ready to take the buy. Once we saw price give this reaction, I needed now us to break this high, because what I don't want price to do is I don't want price after breaking order flow. I don't want price to come in to the 80% or the premium of this manipulation and then sell off. So that's why I personally didn't take this trade here. It's because why would price give this reaction and not go 4.2 pips to the upside and break this high? So that tells me that supply is potentially still in control here. All right. So I'm still looking for UCAD buys, but I'm nowhere. I mean, we still need price. For me at this point, for me to get involved in a buy, this alert needs to go off and tell me, Mike, look for buys. Okay. So that's kind of what I'm doing with UCAD. Now, if we trade lower, am I going to be disappointed? No, because if we trade lower, we're actually coming into the structure point. Okay. I don't mind us going into those structure points. That's ultimately what I'm going to be waiting for. What? Okay, cool. Yeah. So that's ultimately what I'm looking for on UCAD. And then the other one I was kind of paying attention to with CAD news coming up this week was CAD Chef. So this bastard, bro. So CAD Chef, again, I'm bearish on the Canadian dollar, and we do have a very large redistribution that's kind of come into play. I was looking this morning to play out of here, and you can kind of see that, this is still up for grabs. I can definitely still take something out of here. But if this now gives us that break, and really this will give us the break if UCAD really starts to give the bullishness, because inverse UCAD is what a Canadian futures chart. So I'm looking really to only sell this CAD Chef if UCAD helps out and gives us the bullishness. Does that make sense? Yeah. And then to round out what I'm looking on currencies, on ACAD's front, I mean, we're just not getting any help here. Oh, this stupid thing comes in right now. Oh, this thing. I'm going to buy myself a new monitor tomorrow if I wake up and this thing is down to here after hitting that 80. Would you be full risk out of that area on cat? No. CAD Chef's all order flow. Yeah. It wouldn't be. It's all order flow risk, man. Yeah. Hold on. There we go. Yeah, on OddCAD, I mean, it's this is where it's at. You know what I mean? It's in the distribution. It's sitting right here. So, ideally what I want to see is within the next, like, give or take 6 hours, I'd like to see evidence of sellers coming into this market. We talked about it today out of this, and this just looked like garbage. This to me didn't give me any real when we came in and we tapped into this and we were like redistributing, I was waiting for us to break these lows. The fact that we didn't break any of that, all right, kind of like just throws everything out the window. And now I need to start all over with something here. Right. So ideally, the perfect scenario is we just kind of start to build our schematic during the yellow snow. And at Frankfurt or London Open, we get our manipulation. So we do something like this. And oh boy, does the manipulation do that. And we do something like this, then yeah, you'll know I'm a happy camper tomorrow morning. If I don't see this exact scenario play out, you won't see me involved in an NCAD short. This is really the only thing that gets me involved in it. And if you jump over to like NCAD, the reason I'm looking aggressively in that is because NCAD potentially is lining up to be the short-term leader when it comes to comparable strength. You can kind of see what I've got going on here from an order flow perspective, and to confirm the schematic that we have here. What I need us to do, we've already broken this, right? We broke this at the end of New York today. What I'm looking for us to do is just continue going lower to give me a sign of weakness. And on the NCAD front, I'd be expecting redistributions, where on the ACAD front, it would be, give me the distribution at the top and work our way down. So that's kind of what I'm looking at. I've got the alerts, we're about 30 pips from the break down here. I do know that we've broken this right out of here, but I want to make sure, point of interest is A-okay. I just don't see a lot of weakness in this quite yet. And that's why I want to wait for this break right here of this low. All right. So currency wise, that's everything I'm looking at. Secondary list, man, I got a bunch on secondary list, but it ain't happening this week. None of this junk here is happening this week. So I'm just going to kind of sit back. Any advice for hitting profit targets on prop firms while taking reduced risk entries and taking partials? I try to take at least a 1 to 5. Isn't as crazy as yours. Honestly, dude, when did I do that TFT challenge? I think I did the TFT challenge last month. Was it December? I did the TFT challenge in December. I think I took December. I took 4 trades and I passed it. I passed the challenge in 4 trades. And I think I passed the challenge in or the verification in 2, but it was just making sure, one, okay, I got my challenge. I'm not going to take my first trade today. I'm waiting and being selective on what my targets are going to be, so an example would be like, let's say that, let's come back over to ACAD for a second. So let's say that ACAD ends up doing what I want it to do. Right. And I'm able to get into a position here on ACAD. So let's say that, boom, I get into this position and we'll say 6 pips, right? That's respectful for ACAD. So I get a 6 pip stop. My very first targets where I'm paying myself risk is going to be right here. This is where I'm closing out my 1 order. And then obviously I'm taking this sucker all the way down to here. Okay. Now keep in mind, we were here in the middle of October. So don't expect, okay, I've got a challenge and I've got to pass the sucker in 30 days. Don't expect that we're going to get down there in 30 days. So realistically, you only need, most firms are what, 8% now. So just look at this thing. You're at a 1 to 73, right? On a 100K account, if I put $125 risk, all I need is 8K. So I'm going to pay myself 1 order here. Okay. That's going to give me let's see, what is that bad boy at? That's going to give me 41.20. So I'm going to secure $1,000, right? I'm going to secure 1 order. So I'm closing out 25%. All right. I've got a K in the pocket. Then 93.75. So now when I get down to like, just say here, all right, I'm now at a 1 to 60 and I've got $5,700 in the pocket. So if I close out, I've got 3 orders. If I close out 2 of those orders out of 57.50, right? We're talking, what is it? 57.12, right? 57.12. We're talking, was that like 1900 an order, right? 1900 an order. So 1900 an order, that's 3800 closing out the 2 orders. That's going to leave me with 1 order remaining, right? 1 order remaining. Right? Am I doing the math right? Yeah, I am doing the math right. So, and then was that 31.25? 31.25 left. So to now ride this as far as I can, I've got 31.25, and this is one trade, and I'm at 4,800, and all I need is 8K, and I've got, at this point when we break this low, I've got, we'll call it 2,400 in the bag. All right. 2,400, I'm at 60. I mean, geez, right there. You know what I mean? You're on that one trade, right? On that one trade, you're sitting at 72, right? 7,200. You only need another $800 to pass this bad boy. And realistically, what I'd be doing in a challenge is I'd be borrowing some of this money. So instead of doing 125 on my next risk, maybe I throw 250. Maybe I throw 500 and try to catch a 1 to 5, and boom, I'm done with this thing. So but yeah, that's how I would manage it. I mean, realistically, like when it comes to trade management, and I've said this a great deal of times, that trade management is probably the hardest aspect of trading. And I mean, heck, some of you guys that are in my group, when we do a back test session, and we literally go order by order and work in how we're managing it, what we're taking off the table, what we're using and borrowing to throw into another order, right? I mean, some of those back tests, like one pair takes like 4 or 5 hours of us doing a back test. So for challenges, if I can say something, trade indices. Yeah, indices are definitely, scalping indices are way easier. These gave quick money, and even with a risk of 0.20 with high probability trade. Yeah. Well, the thing with indices is their range. You know what I mean? It's nothing for the, like I'll tell you right now, US 30, right? U30, anything less than 30 points is a great stop loss. Why? Because if I can get into a sub 30 point stop loss, I know U30 typically is going to go anywhere between 300 and 600 points a day, right? Well, at minimum, that's a 1 to 10. At minimum, that's a 1 to 10. And realistically, you can typically work in, anywhere between like 5 and 10 point stop losses on U30. The other day, that thing went like 800 points on a 5 pip stop, or a 5 point stop. It was great money. So yeah, indices, I'll tell you right now, personally, indices are my top performers. The last 4 years, indices have been my top performers. So I've made more money on indices than individual currencies. So, but there's days where I might go 3-4 days without an indice trade, because it's just, a perfect example was today. Today indices gave me nothing, absolutely nothing that I wanted to throw money at. So, I'm surprised you wouldn't take a limit out of there, considering it's maintaining that 4-hour leg, but it's just order flow. That's why, and again, it's, should probably get more familiar with EA so that I can split up multiple orders instead of just closing partials. Yeah, bro. I use the PSE, man. PSE is the way to go. Yeah. But the problem with that is, what did I just talk about with fundamentals, right? What can we anticipate is going to happen with the Australian dollar, right? Inflation is continuing to rise. RBA, I'm expecting to raise rates. So why throw money at something that I think is potentially going to lose? So yeah. You took a buy on youth. No, bro. There was nothing for me to take, man. There was nothing for me to take on U30. It reaccumulated in the 50% of the order flow. Hold on. You talking about out of here? Yeah, but did you get a lower time frame entry? Yeah. All right. Hold on. I'll see if I can find it. But so here's my predicament with this. Right. we're bearish here, right? We're bearish here, and I'm waiting for us. I mean, you can see my alert. I'm waiting for us to get up here. This is where I want to sell from. The problem is from the buy side, right? The problem from the buy side is if this and you know, good job with marking this out because yeah, it's your reaccumulation, it's your shakeout, comes into the 50. Um, what's my target though, right? My target is getting up into here, which is about 500 points. I mean, knowing if you can get in sub 30 points on a stop loss, you're over the 1 to 10. So risk wise, yeah, I can see it's worth it. The only issue, you know, for me is if you notice U30, if you notice any indice, right? Let me hide all the drawings for a sec so you can see this. Let's just take a look at it from this perspective. Let's just look at this last 12 months. When you're looking at this chart, look at all of the buys, right? Let's look at all of the buys. Look at all of those buys, right? Now, look at the sells. Look at the sells. Look at the sells, right? So, like, I'm sure you've heard it. The bulls take the stairs, the bears jump out the damn window. For me, it is the path of least resistance. So it is so much easier and less effort to catch a 1 to 20, 1 to 30 on a short than it is to grind out a 1 to 10 on the buys. You know, so nothing against the trade you took. I mean, I'll look at it real quick. Hold on, I'll look at it real quick. But for me, you know, I'm not throwing anything on it for the buy, not where we're at. I'm just patiently waiting for the damn sell, you know. Yeah. So, you know, again, like it just wasn't worth my effort to try to fight this damn thing out for a buy. Let's see, hold on. You're rushing. Yeah, all right. So I mean, I'm in no rush, bro. I got nothing but time. You know what I mean? So uh let's see. What happened down in here at the open? So realistically, I would have waited for this break right here. That break right there confirms it, like bullish intent. And I'm guessing that's where you took it off of, right in there. So we reaccumulate out of this. Hold on. Stop. Oh yeah. So this is your entry right here, right? Was this your entry? Yeah, no, good job with it. I mean, it was pretty clean. Yeah, it was pretty clean. What are we talking here? Just to this high. Hold on. Just this high was 130 points. So yeah, I mean, it makes sense. I agree. Like what is my I'll tell you like my personal opinion on what I'm doing with the Dow. Yeah, I'm waiting right here. You know, I'm just patiently waiting for us to sweep out these highs and come in to mitigate this somewhere in here. So I'm looking around like the 34,200 level is what I'm waiting on. So like another 600 points to the upside is what I'm waiting on. Or, right, or I need us to break to the downside and I'll start playing continuation move or mitigation. That's really what I'm kind of waiting to do. Okay. Um, you know, and you look at, you know, one of the things you want to look at, you know, when I'm trading indices right off the get, I've got these three up and I'm looking. All right. So by looking at these three here, who's the leader and who's the laggard? Yeah. NAS is definitely the leader, right? Down a little over 1.25. Tech is, so we know that tech is just draining the swamp right now. And we know that U30 is the laggard, right? So immediately by looking at this, the first thing that I want to do is I want to jump over to NASDAQ and see what is going on with NASDAQ because it's the leader. It's going to tell you exactly what's going on. And lo and behold, look at what NASDAQ's done, right? So seeing the distribution confirmed, right? Seeing where do we trade into? Hold on. Where do we trade into? I know we're at the 50. Look at this. So seeing where we traded into, seeing where this thing, I mean, we know that this is the UTAD. We know that this is 50% of our UTAD. And now we have a confirmed distro here. Whether or not they're going to come into this to buy up, it's irrelevant, right? We can see that sellers are are in control of this, and we can see that we've got a move of at least 350 points to the downside before we see any kind of evidence that buyers may be coming into this, right? So seeing what this is going on with NASDAQ, and if I jump over to SPX and I see the exact same price action, yeah, look at this, and I see the exact same price action, there's a difference, right? We can see we have a little divergence. We have that lower low, where on NASDAQ, we had the higher high. So we've got divergence, comparable strength divergence. So this tells me that U30 is coming down. This tells me that I will not be looking for buys on this, that this thing is going to be doing this. So that's how I'm going to kind of treat it. And yeah, I mean, I'm looking for shorts. You know, what ideally what I wanted to see us come a little higher today, which we did. And now it's just a matter of play continuation redistros or play mitigations of the distributions themselves. So that's how I'm going to kind of attack what they're doing. Yeah. Does that make sense? Yeah. So yeah, and fundamentally, right? Fundamentally, there is no reason for us to go on a risk on, drive. There's when you think of the economy, right? Interest rates are still going up. Inflation is still rising. It's slowing, but it's still rising, right? Discretionary spending is not a topic of discussion at dinner tables, right? And now we're seeing the labor market catch up, right? We're seeing layoffs happening every day. I mean, I'm going to start a drinking game, and I'm going to ask myself, we're going to, every time a company says they're laying off, we're going to freaking start taking shots. So thoughts on BTC breaking order flow? No, BTC ain't broken order flow, bro. I mean, unless you're talking some micro order flow. No, bro. BTC ain't, don't, I mean, do as you wish, but I'll tell you right now, you ain't going to see Mike here dropping a couple grand on buying BTC, because this look from a market cycle perspective. Hold on. Look at this from a market cycle perspective. What order flow have we broken? The lowest level? No, we haven't. We're here. It's clearing the weak-handed sellers, and it's gonna, I honestly think we're coming here. I honestly think it swept this out, but I think maybe we do this to trap buyers, right? And I think this is where they come in, and we'll see that happen. That's what I think. If NAS comes back up to 11,900, will you be waiting for a micro? Is 11,900 the UTAD? I won't have a limit on there unless the limit's worth it. So if I'm going to put a limit on it, it'll be split risk. So like what I would do is, let's say I have 250 bucks I'm going to throw at the trade. I'll throw 125 on the limit, and it'll leave me the 125 to throw a schematic on if we get it, right? But if that's the UTAD, yeah. tomorrow morning, if we're up in there, that's where I'm going to be looking. Yeah, it's a bull trap. Yeah, that's all it is. This right here, I mean, we're sweeping out these, and realistically, I don't even consider these weak-handed sellers. Like these would be the weakest of the weak-handed sellers. Like these are the like remember what was that movie 300, the Spartans? Like this was that ugly, crazy looking guy. That's those sellers, bro. These guys aren't doing much. So um I think have the same thought on BTC. Have alerts on. Yeah. I mean, listen, I am. I've got orders. I've got orders. Where the hell are my orders? I've got orders here. I've got orders lined up. So I've got a couple orders around the 10K mark, but I've got orders from my lowest order is sitting at, I think it's like 4,600. And I've got orders all to dollar cost average all the way up. The bulk of my orders are 55 to 6,500 is where I've got some orders sitting. So boy, would I be happy if those got hit, man. I think I'd be happier. I mean, I remember I got in, so I bought whatever I bought at 30 in here, actually right here. Yeah. This is at 3,600. At 3,600, I bought 6 BTC back here, and I sold some at 50. I sold some at 58. And then I was kind of holding the rest, but then once we broke this low right here, once we broke that low, was at like at 34,500. I moved it over to USDC. So yeah, I'll tell you right now, this right here, I'll be cashing out when we break these highs up here. So yeah. Whenever we do a session, I always feel like I have much to learn. I appreciate. Yeah, cool, man. Thanks. I really wish I had the capital be a part of it. Oh, okay. Yeah, no worries, man. How long do we have before the halving? So just Google it, man. It's a little over 400 days right now. Hold on. So I guess I should just Google it because I normally have my thing here. But 3,400 ish. Hold on. Oh well, here BTC halving. Yeah. I know the next big halving is Litecoin. Litecoin's having their halving soon. And oh, here I'll just go over this. Hold on. Did you hear some scandals about there's always scandals about USDT. What's the scandal you got? Yeah, what's the scandal that you've got? So these are all the halvings. So Litecoin's in 190 days. That's the next big one. Flux, bro. If you guys listen, what was it 3 years ago when I told everybody to buy Flux at a penny? Flux is having their halving in 14 days. BTC is like 400. Let's see. There it is right here. 462 days is the halving. So if all continues, it's going to be May 1st, 2024. So yeah. It seems it's not regulated in that they could have problems of liquidity. I'll tell you what, you really want a good, hold on. You guys want give me a sec. I mean, it's not backed by anything. You know, the two brothers from Bitfinex is the one that kind of really started it. If you guys want a really good explanation of USDT, hold on, let me pull it up. Hold on. All right, so here you go. Listen to this podcast. There it is right there. that is, what is it, like a 40-minute podcast or something like that? It is a really, really, really detailed explanation of the lineage of USDT and I guess all the character flaws behind it. So it'd be a really good it's a really good listen, and they go into detail. So I can tell you this: I personally do not hold anything in USDT. If I'm holding it in stablecoin, it's going to be USDC. So I trust USD coin way more than I do Tether. So, um, but yeah, but yeah, that's pretty much everything I'm looking at. And then, I mean, I'm still doing the crypto scene. I'm still mining a bunch of crap. I'm still running a ton of nodes and getting paid out very, very nicely. And then in the next bull run, I'm going to hopefully make some good cash off of it. So just like I did the last bull run. So we'll see. We'll see what happens. Do you order a KD3, bro? Yeah, right, man. You mean a KA3? Yeah. Dude, those things, those are all going to big farms, man. What I did get was I got a bunch of KD Pro 2s. The KA3 right here is the one, bro. You can't find them, man. You cannot find them. And I don't even know. I'll tell you right now. I mean, if I could find them, I would get them. But the problem is they're all pre-ordered, but they're not taking pre-orders, and if you go, you can't go on Bitmain's website to get it. You go to Bitmain's and I mean, it's not even offered for pre-order. So yeah, but I did get a bunch of the I did get the pros, and well, you saw, what was it for the holidays? I couldn't pass it up for $200, and I got the Pro 2s. They were like $200 with the coupon code from Gold Shell. So I got, what's it doing right now? So here's the Pro. Where's the Pro 2? I don't even think they have the Pro 2 on here yet. But here, I'll show you. I mean, it does. So this is the farm. Where is it? This is the farm that I'm solo mining on, where I just have the boxes, the KD boxes. So these are the ones I'm running in my house right here. So these are the pros, right? 2.5 terahash. But look at the freaking Pro 2, man. Average is 4.76 terahash. So I mean, so when you add it up for the wattage, this is probably the second most efficient Cadena miner, minus the KA3. But the KA3, no one's ever going to come close to it. But here's the problem with the KA3 too. They're boasting that it's 166 terahash at like something like 3,800 watts, right? But it's a damn unicorn. No one's ever seen one. No one's actually ever tested it out. So maybe Bitmain's got I don't know. Maybe they've got like a ace of spades up their sleeve and they were able to drop it. But yeah, yeah, nope, nobody, none of the YouTubers that get these ahead of time have seen it. I mean, yeah. So whatever, but yeah, I mean, I'm still banging out with this farm that I have in my garage. These five, I think I'm making like 6.3 KDA a day, which, okay, whatever. It's only $6, and well, actually now Cadena is like $1.15 right now, so it's making a little more. But listen, Cadena, imagine this: I've made so far. I think I've made in my wallet. What do I have in this wallet? Hold on. In this wallet, this is just my mining, right? This isn't what I've like purchased or anything. This is just what I've mined. So since I've been mining Cadena, I have, let's see. All right. So since I've been mining Cadena, I've been mining Cadena for like 2 years. Hold on. Did I copy it right? Yeah, this is my address. Copy. Um, Why does it only say 170? I know it's way more than, oh, you know what it is? Hold on. Yeah, wait a minute. Wait a minute. Hold on. Hold on. This is why. Because I have it in Zelcore, man. And Zelcore is, it's not stupid, but you have to like you have like multiple wallets. So hold on. Let me just see. Just to give you an idea of like what I've been able to mine with it. Let's see. So Zelcore. All right, put my old pin and all right, hold on. All right, so what's that? 925. So 925 has 170. And then what's the other one? The other one is on chain one. Yeah, you have like 8 chains that you have this on. Well, whatever. Here, I've got, what do I have? I have, oh, that's what it is. Investment on here. Okay. So I have 100 and, all right. So here we go. This is it right here. So there's 170 in that wallet, which is just that wallet there is just the so I have a KA5. That's what my KA5 is mining to. This is what the box miners are mining to. So I had 170 and this one here has 697. And yeah, I mean you know where Cadena was. So in total, what do I have? In total, I have, let's see. So in 2 years of mining, because I haven't sold any of it, in 2 years of mining, I have 868.02. So yeah, 868.02. An all-time high was what, $27? So 2764 was all-time high, you know? So yeah, I mean, if I have 868 at $27. Yeah, bro. Later, man. Have a good one. Yeah, yeah. It's that's gonna be some good money, man. You know what I mean? It's yeah. I'll be happy with what is that? That's almost a little over 25K. And I've probably paid 2, 4, 6, 8, 10, 12. I probably have $1,600 worth of miners with it. So yeah. Anyway, yeah, man, good stuff, dude. I'm big for Cadena, man. I'm hoping it plays out nicely. So, but yeah, yeah, yeah. Anyways, that's pretty much everything I got. Anyone else have any other questions? If not, oh my bad. Hold on. Um, how can you get into one of those back testing with you guys? Yeah, man. No, it's just for the guys in my private group, man. Your video is 20 minutes behind. No worries, bro. No worries. I'll tell you what, like I used to do it like what, like 2, 3 years ago. I used to do like a back test session in the Aporia group, man. It's honestly, it's time. I told everybody I was going to start this fundamentals podcast. I swear to God, dude, I'm going to do it. I promise you I'm going to do it. I haven't had the time, between and I don't have time because in the month of January, I've taken 5 trades. That's all I've taken the entire month because I've been doing so many other things, man. Um, no, you got it, bro. So yeah, it is what it is, And most of you guys know, I've been busting my hump, man. I've been, for me, staying up late just is non-existent. And I've been going to bed 1, 2 o'clock in the morning, waking up at 5 and doing all kinds of craziness, man. It sucks. So but yeah, it is what it is. And yeah, listen, thanks for hopping on. Yeah, no, it keeps me young, bro. Keeps me young. So I did manage to get to the gym today, so I was happy about that. But I'm paying for it now because I'm gonna crash like a rock. But thank you. Listen, thanks everybody for hopping on. I'm going to call it a night. And yeah, if you guys have questions, hit me up. If not, I'll see you guys in the chats. And yeah, listen, practice proper risk management. Get into the fundamentals, man. I'm telling you right now, that's helped me out tremendously. So other than that, I'll catch everybody later, man. Have a great one. And you know what? I know I said I was gonna do this Sundays. I think I'm just gonna keep it on Tuesdays because I looked at my next 4 or 5 weeks. Next week, I'm flying with my daughter to Ohio. The week after that, I'm going to be in Orlando. The week after that, I'm going to Atlanta with my other daughter. So instead of me just canceling Sundays, I'll keep it on Tuesdays. So it'd be a whole lot damn easier. But yeah, listen, thanks for hopping on, and I'll catch everybody later. Have a great one.